What happens when a regime loses more than money? What happens when it starts losing the one thing every authoritarian system depends on most? The belief that it can still keep the country under control. In my last video, I broke down the power vacuum at the top of Iran's system, the question of who replaces Khamenei, who really decides, and why the formal succession process is only half the story. But this time, I want to look at the other half, because even before Iran finishes deciding who rules next, it is already being hit by another crisis, a crisis that may be even more dangerous than the succession battle itself. Iran is now dealing with a collapsing currency, very high inflation, sanctions pressure, war damage, shaken investor confidence, and a population that is increasingly asking whether the state can still do the most basic job any state is supposed to do: keep everyday life from spinning out of control. The IMF currently projects Iran's 2026 real GDP growth at just 1.1%, with average inflation at 41.6%. While the World Bank says the country is facing intensified sanctions, heightened military tensions, and entrenched structural weaknesses that are driving depreciation and inflation expectations higher. And that is why this story matters far beyond Tehran. Because if the first crisis was about succession, this second crisis is about state capacity. It is about whether the regime that survives the transfer of power will still be able to govern effectively afterward. It is about whether Iran's ruling system can still stabilize prices, protect the currency, and contain social unrest without leaning even harder on coercion. And for American viewers, it matters because when Iran destabilizes under wartime conditions, the effects do not stay inside Iran's borders. Disruptions in and around the Strait of Hormuz are already pushing up energy prices, straining shipping, and feeding inflation fears globally. To understand why this is so dangerous, you have to start with one basic point. Iran's economy has been under pressure for years. But what changed in late 2025 and early 2026 was the scale of the shock and the speed at which multiple pressures started landing at once. The World Bank says the mid-2025 security escalation, combined with tighter sanctions, triggered currency depreciation and raised inflation expectations, while medium-term growth is now expected to stay below recent trends and remain highly exposed to new sanctions and military tensions. That is not the profile of a country heading into a normal slowdown. That is the profile of a country being squeezed from the outside while already weakened on the inside. This is also why the latest protest wave looks different from many of the protest cycles people remember from Iran. In a lot of earlier episodes, the trigger was more obviously political or cultural. This time, the trigger was brutally concrete. The value of money, the cost of food, the cost of fuel, the cost of surviving another month. Bloomberg reported in January that Iran's slow-burning economic crisis hit a tipping point after the rial slumped to record lows, making even basic goods unaffordable for much of the population. Associated Press reporting described sit-ins and clashes at Tehran's Grand Bazaar as merchants and protesters reacted to the country's worsening economy and the falling currency. That matters because when anger moves from activist circles to traders, shopkeepers, workers, and households, the regime is no longer dealing with a niche political challenge. It is dealing with a society-wide loss of economic confidence. And the bazaar angle is not some colorful detail. It is a flashing warning light. The Tehran bazaar is not just a market. Historically, it has been one of the commercial and social centers of Iranian political life. When bazaar merchants start closing shop and protesting because the exchange rate is swinging so violently that they cannot price imports, cannot predict costs, and cannot protect their savings, that tells you the crisis has moved beyond abstract macroeconomics. It means the system is losing credibility with people whose lives depend on stability more than ideology. AP and Bloomberg both highlighted that merchants and shopkeepers were among the first to react. And that is exactly the sort of early warning sign authoritarian systems fear most. Not just street slogans, but elite and semi-elite economic actors deciding the ground beneath them is no longer predictable. This is where a lot of online commentary gets the story only half right. One version says, this is all about sanctions. Another version says, this is all about mismanagement. The reality is worse than either argument by itself, because the two reinforce each other. Europe reimposed nuclear-related sanctions after the snapback process took effect in late September 2025, and U.S. pressure has continued to target Iran's oil and petrochemical networks, as well as the shipping channels used to keep export flows alive. But the World Bank also makes clear that Iran was already dealing with deeper structural distortions, financing pressures, energy shortages, trade frictions, and weak private sector conditions. So yes, sanctions matter enormously, but sanctions hit hardest when they land on top of an economy that is already brittle, politicized, and short on trust. And trust may be the single most important economic variable in Iran right now. Because once ordinary people stop believing the government can stabilize the currency, control inflation, or preserve the value of wages and savings, they change their behavior. They rush into dollars. They rush into gold. They try to move money abroad. They stop investing. Businesses stop planning. Consumers stop trusting posted prices. In that environment, the currency collapse is not just a symptom. It becomes a self-feeding accelerator of panic. The Financial Times described the rial as having effectively turned to ash in the eyes of many Iranians after the 2025 war, while Bloomberg and other reporting tied the latest unrest directly to the psychological and material shock of the currency's plunge. And then came the budget, which may be the most politically toxic piece of this whole puzzle, because budgets are not just spreadsheets. In moments of crisis, budgets tell the public what the state is preparing to defend. Reporting on Iran's 1405 budget showed a dramatic increase in defense and security spending. One analysis put the rise in defense and security allocations at 145%. At the same time, the budget debate landed in a country already furious about inflation, taxes, wages, and shrinking purchasing power. That created an almost perfect perception trap for the government. Even if there were strategic reasons to spend more on defense after a year of war and escalation, ordinary people saw a state that appeared more ready to fund coercion than to protect living standards. And perception, in politics, can matter just as much as policy. From the regime's point of view, more spending on defense may be inevitable. Iran was hit hard in 2025. Its leaders believe more attacks are possible, and the security establishment clearly thinks deterrence and internal control must be reinforced. But from the point of view of a worker, a shopkeeper, or a public employee, the optics are devastating. Your paycheck is being crushed by inflation. Your currency is collapsing. Your taxes may be rising. Your fuel subsidies are being reworked. And at the very same moment, the state is visibly shifting resources toward the military and security institutions that protect the regime. That is not how governments rebuild confidence. That is how they signal that the center of gravity is moving from governance toward regime survival. One of the strongest themes in the interview transcript you shared is that the Iranian government looks less capable this time because the usual cards are not really in its hands anymore. That is exactly the right way to think about it. In a social crackdown, a government can sometimes reduce pressure just by changing one policy or pulling back enforcement. In a currency crisis, it cannot simply command confidence back into existence. Inflation expectations, once unleashed, are much harder to reverse. The World Bank explicitly warns that inflationary expectations and the financing of a growing fiscal deficit are raising inflationary pressure further, which means the state is not only fighting current prices, it is fighting the expectation that tomorrow will be worse. And that is why this is not just another protest cycle. If you look at the reporting from early January, you see something more serious than the usual formula of outrage followed by selective repression. AP's reporting described the January crackdown as the deadliest unrest since the Islamic Republic's founding, with hospitals themselves becoming part of the coercive environment as security agents intimidated doctors and targeted wounded protesters. Amnesty said January 2026 marked the deadliest period of repression by Iranian authorities in decades of its research. Even if the exact casualty figures remain disputed across sources, the broader picture is clear. The state resorted to an unusually intense crackdown because the unrest touched nerves that went far beyond one issue. And this is where another big online narrative enters the conversation: the claim that Iran is just becoming another Venezuela. That comparison is tempting because both stories involve sanctions, inflation, currency collapse, and mass discontent. But it is too simplistic. Iran is not a carbon copy of Venezuela. Iran still has stronger state institutions, a more disciplined security apparatus, and a longer-developed system of subsidies, rationing, and cash transfer mechanisms that can blunt the worst short-term social effects. In other words, Iran may not collapse quickly in a spectacular way, but that is exactly what can make the crisis more dangerous. A regime that can still survive while delivering less and less economic competence may stumble into a long, ugly pattern of stagnation, repression, and capital flight, rather than an immediate collapse. IMF data does not show Iran an instant fiscal freefall, but it does show a country stuck with weak growth and very high inflation in 2026, a bad combination for any system, especially one already under wartime pressure. There is also a deeper paradox here. Iran is rich in hydrocarbons, but the population increasingly feels like it is living in a country that cannot convert its energy wealth into economic security. That paradox has gotten sharper, not weaker. The Financial Times reported that Iran raised petrol prices after sanctions and structural problems forced it to spend about $6 billion a year on petrol imports, despite having vast oil and gas reserves. That is the kind of contradiction that is economically painful and politically humiliating at the same time. It tells people that the country may be rich on paper, but dysfunctional in practice. It tells them that even natural advantage can be neutralized by sanctions, underinvestment, mismanagement, and the politicization of economic decision-making. And once that perception sets in, it is very hard for the state to claim that pain today is part of some credible plan for stability tomorrow. Now let's talk about the other claim floating all over the internet. China will save Iran. That argument is partly rooted in reality. China has been crucial to Iran's ability to keep selling discounted oil despite sanctions. Reuters-based reporting in September 2025 suggested that the snapback of sanctions was unlikely to completely halt Iran's crude exports and could actually increase Chinese access to discounted Iranian oil. But that is not the same thing as saying Beijing is going to rescue the Iranian economy or bankroll the Iranian state at any cost. China wants cheap energy, influence, leverage, and optionality. It does not necessarily want to become the unconditional financial guarantor of an increasingly unstable, sanctioned, war-exposed regime. China may help Iran survive. That is not the same as helping Iran recover. And that difference matters enormously, because survival is what authoritarian systems optimize for when they are under pressure. Recovery is much harder. Recovery requires confidence, investment, institutional reform, and some believable path to lower external pressure. Survival, by contrast, can be achieved through a mixture of repression, controlled subsidies, exchange rate management, and emergency elite bargains. That may be enough to keep the regime standing. It may not be enough to rebuild economic normalcy. The World Bank's baseline is already cautious, and it explicitly warns that further sanctions and military tensions are major downside risks. In plain English, the most likely short-term outcome is continued strain, not a clean rebound. Which brings us back to video number 1. In that video, the big question was who replaces Khamenei and what kind of post-Khamenei system Iran is becoming. AP's recent reporting says Iran has activated a temporary leadership council after Khamenei's death, with the broader succession process remaining in the hands of the assembly of experts. But here is the deeper problem. Whoever emerges from that process will not inherit a functioning, confident, economically stable state. He will inherit a system already under extreme pressure, sanctioned, militarized, economically brittle, and increasingly reliant on the institutions best positioned to enforce order rather than restore prosperity. That is one reason the IRGC matters so much here, not only in politics, but in economics. The Council on Foreign Relations describes the IRGC as one of the most powerful and feared organizations in Iran, with central roles in internal security and the economy. That means that as Iran's political center becomes more security-driven, the same institution that polices unrest also sits closer to the flows of money, contracts, logistics, and economic leverage that keep the state operating under sanctions. In a normal political system, an economic crisis might empower reformers, technocrats, or outside investors. In a system like Iran's, the opposite often happens. The more insecure the environment becomes, the more valuable the security apparatus becomes, and the more the economy itself gets pulled into a security state logic. That does not mean the IRGC can solve the crisis. It means the IRGC can shape how the crisis is managed. And there is a huge difference between those two things. A security-centered state can suppress panic, dominate black market channels, prioritize strategic industries, and enforce political loyalty. But it is much less good at rebuilding trust, inviting real investment, or persuading society that the economy is becoming more predictable. In fact, if the public increasingly sees the same institutions expanding their reach over both politics and the economy, that can deepen the sense that the system's answer to every problem is more control, not better governance. That is one reason why what looks like consolidation at the top can actually mean more fragility underneath. And then there is the war factor, the piece that makes this story relevant not just to Middle East watchers, but to American households. In the first week of March 2026, AP reported that conflict tied to Iran had severely disrupted oil and LNG flows through the Strait of Hormuz, while the Financial Times reported that jet fuel prices had surged to near 4-year highs as the war squeezed supply chains. In the U.S., local reporting citing AAA showed the national average price of gasoline rising to about $3.11 a gallon after the latest military escalation, with analysts warning it could climb further. So when people say this is just an Iran story, that is not really true. If Hormuz is disrupted for long enough, this turns into higher gas prices, higher shipping costs, pricier airline tickets, and renewed inflation pressure well beyond the region. And that is why the succession story and the economic story are really the same story. A succession fight in a relatively stable state is one thing. A succession fight inside a sanctioned, inflation-ridden, war-exposed economy is something else entirely. In that environment, every decision becomes harder. Elite factions are more nervous. The public is less patient. External adversaries see more openings. The next leader, whether he is a continuity cleric, a compromise candidate, or the front face of a more openly security-dominated system, will start from a weaker economic foundation than Khamenei had for most of his rule. That is the part some of the online chatter misses. It assumes the system can reset after succession. But succession does not reset a currency crisis. It does not erase a fiscal squeeze. It does not reopen sanctioned trade channels by itself. There is also a quieter but very important psychological dimension to all this. People can tolerate hardship for a long time if they believe the people in charge still know what they are doing. What becomes intolerable is hardship plus drift. Hardship plus visible uncertainty. Hardship plus the sense that the ruling system is protecting itself first and solving the underlying problem second. That is why the combination of collapsing currency, heavy security spending, tax pressure, and violent repression is so combustible. Separately, each problem can be framed as manageable. Together, they tell a much more dangerous story. The state may still be strong enough to punish dissent, but it looks less convincing as an engine of competent economic management. So what are the actual ways out for Iran? On paper, there are only a few. One is some kind of diplomatic opening that meaningfully reduces sanctions pressure and gives the economy more breathing room. Another is a serious domestic reform effort credible enough to restore some trust, not cosmetic fixes, but real stabilization and a clearer social contract. A third is the path Iran appears closest to right now. Double down on control, absorb the pain, keep the system funded through whatever channels remain, and hope repression plus minimum social cushioning outlasts public anger. But the international environment is not especially favorable to a quick economic release valve. The IAEA is openly warning of the need for diplomacy to prevent nuclear escalation, while Europe's sanctions snap back and the broader war environment suggest external pressure is more likely to intensify than disappear overnight. That means the most realistic short-term forecast is not collapse tomorrow, but something that may be worse in its own way. Prolonged stress. Prolonged stress means a state that keeps functioning but at rising cost. A state that keeps paying for control while the economy keeps leaking confidence. A state that may still be able to fund repression, but only by draining future resilience. A state that can still survive shocks, but becomes more brittle with every new one. That kind of system can last longer than outsiders expect, but it also becomes more vulnerable to sudden breaks. Another sanctions hit, another military escalation, another exchange rate plunge, another budget shock, another moment when people decide silence has become more expensive than protest. The World Bank's outlook, the IMF's inflation projections, and the reporting from inside Iran all point in that same direction. Not a clean crash, but a dangerous accumulation of fragility. So here is the cleanest way to understand Iran right now. The first crisis is about who takes power. The second crisis is about whether power still works. The first crisis is elite politics. The second crisis is whether millions of ordinary people still believe the state can run the country. And if that second belief keeps eroding, then the first question, the succession question, may matter less than Iran's elites think. Because a new leader can inherit the office, he cannot automatically inherit credibility. That is the real danger in Iran right now. Not just inflation, not just sanctions, not just war, not just succession. The real danger is that these pressures are merging into a single test of regime capacity. Can the state still stabilize the currency? Can it still govern without constantly escalating coercion? Can it still ask people to endure pain without offering them a believable path out of it? Can it still function as more than a machine for survival? Because once a population starts asking those questions faster than the government can answer them, the crisis is no longer merely economic. It becomes existential. And that brings us to the real bottom line. In the last video, the question was, who replaces Khamenei? In this one, the question is more unsettling. What if the next leader inherits a system that can still punish, but can no longer persuade, stabilize, or deliver? If that is where Iran is heading, then this is not just an economic crisis. It is the slow-motion failure of regime control.